On 1st April 2020, Mrs. NR and Sons and Co. purchased 4 machines for rupees 2,60,000 each. I just make a note of all the transactions happen. 1st April 2020. On that date, they have purchased 4 assets at rupees 2.6 lakhs each. On 1st April 2021, 1 machine was sold for 2,05,000. 1 machine sold. Plus symbol represents purchase and minus symbol represents sale. Right, for our understanding, it's only a working note for us. The sale value being 2,05,000. On 1st July 2022, the second machine was destroyed by fire and insurance claim received. So one more machine also lost, but we get insurance claim. Okay, this is sale, this is lost. Anyhow, though we lost, we get the insurance claim. And the amount received on 15th. Amount received on 15th July 22. A new machine costing 4.5 lakhs was purchased on 1st October 22. New machine. So another machine purchased on 1st October 2022. The value of that time being 4.5 lakhs. Books are closed on 31st March every year. So year end being 31st March. And the depreciation has been charged at the rate of 15% per annum on diminishing balance method. So WDV method of depreciation, rate of depreciation being 15%. You are required to prepare machinery account for 4 years till 31st March 2024. Calculation to be shown in nearest rupee. So we have to calculate up to 31st March 2024. You have to round off to the nearest rupee. Okay. So the required numbers or required details were taken now. Now let me solve this illustration. What we have to do? You are required to prepare only account, machinery account. We are not asked to pass the journal entry here. So directly go for the assets. Now, as nothing stated, we assume the depreciation could be adjusted in the machinery account itself. If specifically stated, you have to create the provision, then you can have the provision for depreciation. Else, as you plan, you can go with. So I just prepared machinery account directly here. Okay, machinery account. Now, tell me how a machinery account should be. How should the machinery account be? Come on. So already we have studied the format also. A machinery account will have opening balance and closing balance. Okay, opening balance and closing balance in the debit and credit side. The transaction which increases the value of the assets will be posted on the debit side. The transaction reduces the value of the asset will be posted on the credit side. Bank, a new purchase increases the value. On sale, if you are getting profit, it means you are getting the value more than its book value. So these are the 3 items most probably will appear in the debit side. In case of sale, the assets value will decrease. In case of loss, the value what you show in your book may not be realizable or losing that value. So it should be in the credit side, it reduces the value. And of course, every year you depreciate. So that will also be a reason. These are the 7 items only possible in the case of assets. Now, we will not go for this model. So, because unless it is clearly stated, you have to create provision for depreciation account. You don't need to go for that. You just stay with this one. This is enough. This is enough. Is that clear? Let's now start. Now, machinery account. In the very first case, 1/4/2020, okay, we purchased 4 machines. Any transaction increases the machinery account will be in the debit side. The transaction reduces the value of the machinery should be in the credit side. As this one increases, so it should be in the debit side. 2. Which date? 1/4/2020. To bank. 2.6 lakhs per machine for 4 machines. 10 lakhs 40,000. 10 lakhs 40,000. Then year end 31st March 2020. We don't have any other transactions for the year. So naturally for the year end you have to provide the depreciation whether it's stated or not under WDV method at the rate of 15%. So here 31st March 2021 by depreciation. On this you have to calculate 10%. So 15%. 15% on 10 lakhs 40,000 being how much? 1,56,000. 1,56,000. I can calculate as a separate working note here. Working note number 1. Original value being 10 lakhs 40,000. For that you have to calculate 15% depreciation, which is 1,56,000. I have posted. No more transaction in that year, so that year should be closed before you move on to the next year. Now I am going to close this year. Okay. 10 lakhs 40,000. 10 lakhs 40,000. You have balance carried on. Balance carried on. The balance carried on in this case being 8,84,000. Balancing figure. That becomes the balance for the next year. To balance carried on, brought down 8,84,000. In this year, okay, day 1 itself, they sold a machine. Day 1 itself, they sold one of the machines, 2021. So always remember, in case of sales, 3 points should be ensured. Number 1 being on sale. On sale. 3 points should be ensured. Number 1 being calculate depreciation of the asset sold up to the date of sales from the year beginning. Okay. Current year depreciation for the asset sold. Number 2, find out the WDV as on the date of sale of that asset. Number 3, find out profit and loss of that asset. These are the 3 working notes you have to do. You have to do. Okay. Let's see. Here, for this asset, on 1/4/2020, the original value being 2,60,000. 2,60,000. For the year 2020-21, first year depreciation might have been provided for this asset at the rate of 15%. 15% on 2,60,000 should be 39,000. Am I right? So you have to subtract 39,000 after subtracting the final value being 2,21,000 WDV. On which date? The next year first date, 1/4/2021. On the date it was immediately sold. We don't have the depreciation in the year of sale because in the year of sale only 1 day is there immediately sold. So we don't have any depreciation for this asset in the year of sale. So this is what about the WDV, but sold for how much? 2,05,000 rupees. Now compare with the sale value. The sale value in this case is 2,05,000 rupees. So we have a loss of rupees 16 here. Loss on sale. Loss on sale. We don't have the depreciation in this date. So we now skip this one. We don't have. Okay. This is for the adjustment number 1. We don't have the depreciation. The WDV being 221 and profit and loss here being 16,000. We found out all these things. That too loss. Loss could be in brackets. Now I'll just post that by as in the date of sale. This is 1/4/2021. This is also 1/4/2021. 2021 by bank. How much I collected? 2,05,000 collected, and I don't have any depreciation that year, but there's a loss. Loss reduces the value of the asset, so should be in the credit side. So loss on sale. Loss on sale. Loss on sale in this case being 16,000. And up to 31st March 2020, 2, we don't have any other transaction. The next transaction 1/7/2022 will be in the next financial year. This second financial year ends on 31st March 2022. On the date, we don't have any other transaction. Directly go for the year end 31st March 2022. Now you have to calculate depreciation for the remaining assets. Depreciation for the remaining assets. You understand? So we have to calculate the depreciation separately. I'll just open a working note here. Remember, in case of SLM method, calculation of depreciation is pretty simple. From the opening value or original value, you can apply the rate and get the amount of depreciation. But in the case of WDV, we have slight calculations oriented here, right? So actually 10 lakhs 40. Still we have how many assets? 2.6 lakhs per asset. We still have 3 assets. For the 3 assets, depreciation for the first year should be subtracted. After that, you have to calculate the depreciation for the second year. Is that okay? Let's see. So first year 2.6 lakhs into 3 years. What is the value you have? 7 lakhs 80,000 rupees. And you have to find out the depreciation for the first year on this 15%. On this 15%, how much? Come on. 1,17,000. After subtracting 1,17,000, still we have 6,63,000. And for the second year, you have to calculate depreciation at the rate of 15% on this. Tell me. I think the depreciation for the next year being 99,450. Are you getting this or not? Come on, come on. Yes, yeah, you get this one. So this is what about 99,450. If you go for the third year, again you have to calculate this way. Fourth year, you have to calculate this way. But the calculation seems to be a bit comprehensive, means a lengthy one. To simplify the calculation, I will give this way. First step number 1, find out rough balance. Find out rough balance. By totaling this, what is the balance you have? 8,84,000 minus this one. Minus 2,21,000. What is the ultimate value you have? 6,63,000. You got this value directly. By finding a rough balance, you will get this value directly. Is that okay? In this balance, you find out new one or existing one. Do we have any new asset purchased in this year? No. From this, it is very clear that all the 6,63,000 is meant for the existing asset only. Now you can calculate the depreciation on this at the rate of 15%, which is 99,450. You get this value directly. For all the year, you can use this format. I have already given the format here. Okay, to find out the depreciation and closing balance for any year, first balance the assets roughly. I just balanced and found out the balance, that balance being 6,63,000. After calculating this, you segregate that into 2 parts. One is new asset, another one is balance. Whatever the value you have now, out of that value, how much is for the means new asset purchased and how much is for the existing assets. For the newly purchased asset, you can claim the depreciation from the date of purchase to the year end. You cannot calculate for the whole year. So you have to calculate only for the period you have this for your purpose of utilization. Balance exists since very long ago, so you can calculate for the full year. Okay, in this case, we don't have newly purchased assets, so it is 0. All the value are eligible for full year's depreciation. So I calculated full year's depreciation. Hope now we'll be able to understand this format. Any doubts here? How can you calculate? For WDV model, you can roughly tally and find out the balance. In that balance, any newly purchased assets, if you have, subtract that one, balance, for the balance, you can calculate the depreciation for the whole year. For the newly purchased asset, you have to calculate only for the period you have used it. So here we have not purchased anything new, leave it only for the balance assets. For that, you can calculate full year. This is how you can calculate the other way of calculation. Clear? And apart from that, as I already told you, on sale, you have to calculate 3 parts. Part 1 is depreciation for the current year or the year in which the asset sold. Second part is calculate the WDV. Third part is all about calculate the profit and loss on sale. How? Original value, depreciation up to the date of sale is subtracted. Then we get the WDV value and sale value. Compare the sale value with the WDV value to find out the profit and loss. This working note you have to do in the case of sale. Okay, these are the two steps. These are the two steps. Okay, to find out any profit and loss on sale of any assets. For that you can have the working note number one. Second, how can I calculate the depreciation under WDV model for any year? For that, second working note can be used. Clear? So rest will be the easy one. Okay, now you just follow this year after year. You can handle easily. Now finish up telling this. Second year is over. Second year is over. 8,84,000. 8,84,000. You'll get the balance carried on here. How much is that? Balance carried on. I think 5,63,000. 5,63,550. 550. Take to the next year 1/4/2022. Two balance brought down. Here the value being 5,63,550. In the year 22-23, in the year 22-23, we have one sale and one purchase. Two things are happening in this year. The third year we have two happenings. So one is sale, one is purchase. One is sale, one is purchase. Is that clear? Now, in case of sale, what you have to do? You have to do this working note. Okay. This is the working note. Refer this one. Refer this one. Now for the second year, I am going to use the another calculation here. I may use the dollar symbol. This one, for this one, for this one. 1/7/2022, one of the assets exists already got met with accident, lost. As we have already insured, we now get the compensation. The compensation we receive being 1,75,000 lakhs on 15th July. So for that, let's see. Let's see. 1/4/2020. This asset we originally purchased for 2,60,000. This asset was used in the year 2021 fully. So fully depreciated at the rate of 15%, which is 39,000. Then we found the WDV on 1/4/2021, which is equivalent to 2,21,000. 2,21,000. What about the year 21-22? In year 21-22 also we have used. Only in 22-23 we used for a short tenure. So in 21-22 we used that asset fully. So you have to calculate depreciation at the rate of 15% on this value. Come on. How much is that? 2,21,000 into 15% on this. 33,150. 33,150. Okay. Now if I subtract this, then I will get 1/4/2022 WDV on this date. This value being 1,87,850. Now in 22-23, exactly on 1st July, it got destroyed. You will be eligible for claim the depreciation only to the date of destruction. Though you will be getting the money 15 days later, you are not eligible for claiming the depreciation after the destruction. 1/7 to 15/7, of course, you are not eligible for claiming the depreciation. So you have to claim the depreciation only up to 1st July. So up to 1st July 2022 on the date of destruction, you have to calculate the depreciation. Here we have to calculate depreciation on this balance 15%, but provided we have used in this current year only 3 months. 5th month, 6th, sorry, 4, 5, 6, 3 months only used. So into 3/12. Into 12, 3/12. So you have to find out the depreciation in the year of destructions to the date of destruction, up to the date of destruction from the year beginning. So 1,87,850 for that 15% calculate for 3 months. If you calculate for 3 months, how much you will be getting? Hope this is 7,044. Am I right? 7,000. Okay, I can round off to the nearest rupee as per the statement given there. So after subtracting this, the balance being the WDV as on the date of sale, the WDV as on the date of sale being destruction being 1,80,000 rupees, 806. But compensation received, not sale consideration, compensation received. The compensation we received in this case being 1,75,000. So 1,75,000. And as per our book, it shows 1,80,000 being the value, but we sold it for, or we realized only 1,75,000. Definitely there is a loss on destruction. This value being 5,806. 5,806. Any doubts here? So once sale happens, we have to record three items. One is depreciation of the assets in the year of sale should or destruction should be first shown, which is 7,044. Next one is find out the WDV of the asset as the date of sale, which is 1,80,806, and find out the profit or loss. So here we have loss 5,806. Clear? So I have to post all these values, right? So I'm going to post all these values here. So I don't want the question anymore. I want only these three items. This one is not required. Okay. Now I'm going to post all the values on which date? On the date of destruction. Okay. Our amount collected on 15th July 2022. Okay. So you get the cash. You get the cash of rupees 1,75,000. Because of this, we face a loss. Loss reduces the value. So it should be in the credit side. Loss and destruction. The value being 5,806. 5,806. Not only that, we have to find out the depreciation as of the date of sale or destruction. That should also be debited here. 7,044. 7,044. Is that clear? We got the value. Three items should be noted and recorded while selling. Find out any depreciation during the year of sale. During the year of sale. Profit and loss due to sale or destruction. Third one is amount collection. The three should be recorded. So I have posted it, all the three. After that, I had to go for what? This one, 11022. 11022, we purchased one more asset. Also falls in the same financial year, 22-23. So here, 110-2022, we purchased one more asset to bank, the value being 4.5 lakhs. The value being 4.5 lakhs. Clear? Clear? Now I don't want this anymore. I don't want anymore. Now, how can I calculate the depreciation for the remaining asset in this year, third year? Okay. So you have to find out the depreciation. Which date? 31st March 2023. You have to find out the depreciation first. You have to find out the depreciation first. And then balance carried on. Okay. Now, the total of this being 10,13,550. 10,13,550. How can you calculate the depreciation? Go for the third calculation, third working note here. How? Find out the balance by solving rough manner. Rough balance. How much is that? 10,13,550 minus this value we know, which is nothing but this WD value. 1,87,000. Sorry, 1,80,000. 87,850. The summation of the three being this one, right? The WD value in the year beginning. Okay. And get me the value here. How much you have now? 8 lakhs. 8 lakhs 38. Come on, tell the value by tallying it rough. Okay, tallying it rough. Come on. Make it faster. Yeah, come on, tell me.
8,25,000.
Earlier you gave me the different answer.
1,70,000.
Okay, now you have to be careful. 8,25,700 is the balance. Here, for the newly purchased asset being 4.5 lakhs. Balance will be the asset exists since very long ago. So 8,25,700, from there 4,50,000 is subtracted. Balance amount being 3,75,700. For this 15% you can claim fully for this 15%, but you have to claim only for the specific period. You purchased it for 1st October. Year closes on 31st March. So from 1st October to 31st March, we have 6 months. So this is eligible for 6 months in depreciation. Come on. For the first one, I think 33,750. The next one, the depreciation being 56,355. 355. Then the total depreciation in this case being 90,105. 90,105. Is that clear? 90,105. Now, you subtract the depreciation and find out the new balance now. The new balance in this case being from 8,25,700, you can subtract and get this balance. You get the same balance only on tallying this one also, right? So 7,35,595. Now we have to go for one more year. We have to solve up to 31st March 2024. So start with the next year, 1/4/2023. Balance brought down. This value being 7,35,595. And here we don't have any transaction in the last year. As we don't have any transaction, you just to calculate the depreciation and subtract. So for the year end 31st March 2024, you subtract the depreciation here. So the depreciation in this case being, you don't need to go for calculating separately for the working note. Else if you want, then you can do it. So depreciation for this year being 7,35,595, and for that 15% will be calculated. So the 15% on this being 1,10,339. 1,10,339. Is that okay? Depreciation for this year. Now finish up tallying. The year is over. So balance carried down by the time. 7,35,595. 7,35,595. The balance carried down in this case being 6,25,256. Only when we have newly purchased asset, then this value is segregated into new asset as well as old asset. If we don't have new asset, directly calculate whatever the balance you have. On that balance, you can calculate the depreciation at the rate applicable here. Is that clear? Hope now you'll be able to understand. See the presentation. This presentation is most important. Okay. For whatever the reference may be, I have given a reference also. Working note number 1, 2, 3, 4. So if you, as a valuer, if the teacher gets any doubt, he can simply go and refer where the working note is there. Working note is also forming part of your answer. Right. So this is the working note for the sale, and this one is the working note for the sale, destruction of the asset. So we have given all the working note reference also. That's how you can give the working note reference for scoring good mark without any reduction in the mark. Clear? Come on, make a note of it. Question number 4 is all about routed through machinery disposal account. You have to prepare machinery account, provision for depreciation account. It means we have provision also. Depreciation is accumulated in provision for depreciation account in this model. And we have one more account called machinery disposal. So whenever we sell the asset, any asset sold, that should be transferable from the assets account, as well as any accumulated depreciation on the asset sold available in the provision for depreciation should also be transferable from that account to machinery disposal account. Okay. I have given the format in the previous class. I just do a recap and then I'll solve this illustration. Here is. So in case with the provision for depreciation adjusted or routed through provision for depreciation model, you have to open the asset account. In this case, we don't record the asset, means depreciation. Okay, we start with the opening balance and closing balance of the assets, and any transaction increases the value of the asset will be posted in the debit side, usually only purchases. The transaction reduces the value of the asset will be posted in the credit side, usually asset disposed. And the depreciation on that asset is accumulated in provision for depreciation. We start with opening and closing. Every year the depreciation you calculate will increase the provision for depreciation account balance. So I am going to post that in the credit side. The moment one of the assets sold and that sale routed through asset disposal, then the disposed assets original value is transferred from here to here, and the disposed assets depreciation accumulated since the date of purchase to the date of sale is transferred from here to here. These are the 2 points you have to understand. And then you can finally close this here. So you have to understand the format and then you can proceed. Okay, you have to by heart the format, immediately post all the items available here. So I'll just now finish off posting the format here. Clear? Let's see. Format. Okay. You have to by heart the format. So one is machine account, and provision for depreciation account, and machine disposal account. So no need to refer the illustration. Just to finish off posting the format here. What other things will come here? So we'll start with opening balance here, closing balance here, opening balance and closing balance here. In case of provision for depreciation, opening balance should be in the credit side and closing balance should be in the debit side. Right. Whenever any transaction increases, the machine value should be in the debit side. If it decreases, it should be in the credit side. Anything causes the increase in machine account should be in the debit side. Usually only the purchases, bank in bracket purchases. And in case of sale, that sale is disposed or transferred to the machine disposal account. So machine disposal account. Here, that will come here, machine account. Okay, the current year depreciation will increase the accumulated depreciation or provision for depreciation account. So depreciation for the current year for all the assets put together. When any of the assets sold, immediately the accumulated depreciation on the assets sold will be transferable from provision to machine disposal account. Here, machine disposal account. Okay, here provision for depreciation. Provision for depreciation. Clear? And in provision for machine disposal account, you get the collection later on. So bank account debit to machine disposal. On disposal, if you get any profit, it increases the value of the machine disposal. So profit on sale should be, profit on disposal should be in the debit side. In case of loss, it should be in the credit side. Loss on disposal. I am not reading the illustration. Based on the requirement, I came to know we have to open the machine account, provision for depreciation account, machine disposal account. The next moment I finish posting, what other things will come there. That's all. Thereafter, just go and post the values. That's all. Unless you are able to rewrite the format easily or immediately, that sum seems to be a bit tough. Clear? Now we'll post all these values here, one after one. On December 23, two machines which were purchased on 1st October 2020 costing 50,000 and 20,000 respectively had to be discarded and replaced by two new machines costing 50 and 25,000. Right. Now, December 2023. Okay. Originally purchased on which date? 1st October 2020. Purchased for 50,000 and 20,000 respectively. Two assets. Okay. These two assets were discarded here. And on the same date, two new machines costing 50 and 20,000, 25,000 were purchased. Originally purchased on this date. On this date, these two assets sold. Instead of that, we purchased two more new assets. Old assets disposed and new assets purchased. One of the discarded machine was sold for 20 and other for rupees 10. The sale value being 20 and 10,000. Sale value 20 and 10. Otherwise, we sold for 30,000. The balance of the machine account as on 1st April 2023 was 3 lakhs. So 1st April 2023. So we have to prepare for this date, 31st March 2024. So we are going to account this year. We found out which account, which year's account we are going to prepare. The transaction happens in December 2023 and we have been given the balances on 1/4/2023. So from 1/4/2023 to 31st March 2024 is the requirements we have to prepare the account for this period. Right. And the balance of the machine account on April 1st 2023 being 3 lakhs, against which the depreciation provision stood at rupees 1,50,000. It means opening balance on this date being 3 lakhs asset for that accumulated depreciation on the date 1st April 2023. 1st April 2023. The accumulated depreciation on this asset being 1,50,000. Is that clear? 1,50,000. Okay. This date balance 3 lakhs and 1.5 lakhs. One is asset, another one is accumulated depreciation. Accumulated depreciation. Is that clear? And depreciation was provided at the rate of 10% on reducing balance method. Reducing balance method. So we purchase new asset. Purchase is very simple. We can directly post here 75,000. This one is over. When was it purchased? December. So we can assume December 1 or December last. We assume last date of December it is purchased. 31st December 2023 it is purchased. And on the same date there is a disposal. 31st December 2023 there is a disposal. Clear? So all the available informations were posted comfortably. Is there any doubt? Anything happens or any sale happens, 3 things to be calculated. One is all about depreciation for the year of sale. Second one is WDV as the date of sale. Third one is all about profit or loss on sale. So these are the 3 points you have to calculate. Let's see here. Let's see here. First October 20, original value of the 2 assets being 70,000. 70,000 rupees. Now, as on 31st March 21, we might have provided depreciation for that 70. Both assets are purchased the same date, sold on the same date. So you don't need to calculate separately. You can calculate in combined manner. The rate of depreciation being 10%. So you have to calculate at the rate of 10%. How many months? 1st October. From 1st October to 31st March, 6 months are there. So you have to calculate for 6 months. 0.5. 3,500 is subtracted. Then 66,500. This is what about the WDV on 1/4/21. Sold only in December 2023. It means for the year 21-22, it was used perfectly for the business. For that, you have to calculate again 10% for the full year. 6,650 for the full year we have used. So you have to calculate the depreciation for the full year here. What's the final value? 59,850. This is nothing but balance as on 31st March 2022 or WDV. The balance is WDV. Now, next again 31st March 23. One more year also used. So for the year 22-23, this asset is used fully because sold only in December. Up to 31st March, again you calculate the depreciation for the whole year at the rate of 10% on this value, which is 5,985. 5,985. If I subtract, then I will get the WDV as on 31st March 2023. WDV in this case being how much? 53,865. Is that clear? 53,865. And we have not used fully. In this year, we sold on 31st December 23. So you have to calculate the depreciation only to the date of sale. 9 months we used in this year. So you have to calculate the depreciation for the 9 years. So 10%. 9 months, sorry, into 9 by 12. Okay, 9 by 12. We used it only for the 9 months. So for that, we have to calculate the depreciation for the 9 months. Come on. Hope the value being 40, 40. Am I right?
Yes, sir.
40, 40. Then this is the WDV as on the date of sale. The date of sale being 49,825. And both the assets sold for sale value 30,000 rupees. Both the assets sold for 30,000 rupees. From this, it is very clear we have loss on sale 19,825. What is the accumulated depreciation on all the assets put together up to the date of sale? Come on, do the addition of all the four. What you have to do? Any asset sold, the original value of the asset sold is transferred from the machine account to machine disposal account. The original asset value being 70,000. I transfer from here to here. Second part, accumulated depreciation on the asset sold since the date of purchase to the date of sale. So you have to add the almost 1, 2, 3, 4 depreciations are there since the date of purchase to the date of sale. You have to add up all these things. Hope this value being 20,175. Once the asset sold, the asset value is also transferred, and accumulated depreciation on that will also be transferred. So here the value being 20,175 is transferred from here to here. 20,175. We have transferred this, and the sale value is 30. We realized this 30,000 rupees because of sale. Actually, we lose. The loss will be posted here 19,825. Now, if you tally the machine disposal account, it will get automatically tallied without any tension. Is that okay? If you know the format, you post there, automatically you get the answer. Now we have to find out the rest of the things. So here 3,75,000, 3,75,000, balance being 3,05,000, 3,05,000. Okay. Now how can I calculate the depreciation for all the assets for the current year? For the current year. Is that okay? There's a current year depreciation. There is a current year depreciation. 40, 40 you have to post. 40, 40 you have to post. Okay. What about the other assets? That one also you have to calculate, no? For the other assets also you have to calculate. How can you calculate, sir? Now, find out the rough balance. Find out the rough balance. Rough balance is this way. Asset value is 3,05,000. And provision for depreciation balance is, come on, tell me. 1,50,000 plus 4,040, 1,54,040 minus 20,175. Come on, tell me that value. 1,33,865. This value being 1,71,135. Is that clear? So, how can you calculate the rough balance? How can you calculate the rough balance? Okay. In the earlier illustration, the rough balance is nothing but debit minus credit. In this case, debit minus credit of the asset, debit minus credit of the provision for depreciation, and then make a net of it. Because here the depreciation already included here. And the provision model, the depreciation included in the new account. The depreciation is included in the provision for depreciation account. So you have to find out that one as well as this one and make it simplified. You now calculate depreciation for the asset, new asset as well as old asset. Here the new asset being 75,000. This one balance will be the existing asset. What is the value for the existing asset? 96,135. To calculate the depreciation for the any year, find out the rough balance. From the rough balance, find out the new assets value, subtract that. After subtracting any balance you have, it is nothing but the old assets worth or value exists since very long. For this, you can claim the depreciation fully as per normal provision 9,635 9,613.5. In case of new asset, you have to calculate for 10 percentage for how many years? Since the date of purchase, it is purchased on 31st December and year closes on 31st March of the next year. So 3 months interest means depreciation should be calculated into 3 by 12. What is the value? 1,875. If you add up these two, what is the ultimate value? Come on. What's the value?
11,488.5.
489. Okay, 11,489. I rounded off to the nearest whole number. Now, find out the provision for depreciation accounts balance here. This value being 1,65,529, 1,65,529, and this closing balance being 1,45,354. Clear? Clear? One of the interesting illustrations, isn't it?